In a stunning escalation of trade tensions, China has implemented a comprehensive ban on Boeing aircraft imports, sending ripples through global markets. This decisive action comes as a direct response to the Trump administration's hefty 145% tariffs on Chinese imports, transforming the once neutral aviation sector into an economic battleground. The situation intensified in early April 2025 when China's Ministry of Commerce expanded the embargo to encompass after-sales support, spare parts supply, and technical cooperation. This announcement followed the Trump administration's heightened scrutiny of Chinese investments in American aerospace technologies. For Boeing, this couldn't come at a worse time. Still recovering from the 737 MAX crisis and recording $11.8 billion in losses during 2024, the company now faces exclusion from a market that represents 15% of its global commercial aviation business, a share projected to grow to 20% within the next decade and a half. The immediate market reaction was swift and severe, with Boeing shares plummeting 3% following the announcement. Major Chinese carriers including Air China, China Eastern, and China Southern had collectively planned to receive 179 Boeing aircraft between 2025 and 2027, plans now thrown into disarray. Financial analysts project potential losses of $40–50 billion in market capitalization for Boeing if the situation remains unresolved. The implications extend well beyond a single company. The U.S. civil aviation sector generates approximately $130–140 billion in annual exports, with China representing a substantial portion of this trade. Boeing's extensive supply chain, which spans all 50 states and supports countless American jobs, now faces serious disruption. In response, the Aerospace Industries Association has begun lobbying for emergency economic relief measures, while bipartisan calls for congressional hearings grow louder. The broader economic impact is already visible. The Dow Jones Industrial Average experienced a historic two-day drop exceeding 4,000 points in early April 2025, underscoring investor concerns about escalating trade conflicts. China's strategy appears calculated to maximize pressure on the American economy while accelerating development of its domestic aerospace industry. Manufacturers like Comac stand ready to capitalize on Boeing's absence, though transitioning to alternative suppliers presents significant operational challenges, including pilot training requirements and regulatory approvals. President Trump's administration maintains its commitment to aggressive tariff policies, viewing them as essential tools for addressing trade imbalances despite the evident risks. Recent Gallup polling reveals a nation divided, with 52% of Americans worried about economic fallout versus 43% supporting the hardline stance toward China. As Boeing struggles, European rival Airbus is positioning itself to capture market share. With an established assembly facility in Tianjin and growing Chinese market presence, Airbus reportedly has a $25 billion agreement with China Eastern for up to 250 aircraft over the next 5 years. European Union officials have publicly endorsed Airbus's expanding role, framing it as evidence of resilient transcontinental partnerships. This aviation standoff symbolizes the broader trend of rising economic nationalism and supply chain fragmentation. Both the IMF and World Bank have issued warnings about the potential consequences of prolonged trade conflicts, projecting a possible 1.5% reduction in global GDP growth by year-end if tensions persist. The situation raises profound questions about the future of globalized industries and international economic cooperation. As geopolitical rivalries reshape traditional market dynamics, stakeholders worldwide must navigate an increasingly complex landscape. What's your perspective on this developing trade conflict? Could we see a diplomatic resolution, or is this the beginning of a prolonged economic standoff? Share your thoughts in the comments section below. Don't forget to subscribe to our channel for in-depth analysis of global economic developments and hit the notification bell to stay updated on this evolving situation. If you found this analysis valuable, please share it with friends interested in global trade dynamics.